All right, guys, we're going to get started in 1 minute. Sweet. All right, let's do it. We are going to go ahead and get started, guys. Welcome to the 15-minute trap how-to live stream. This is a big one. I know a lot of you have been waiting for this one. This is a important stream in my opinion, guys. This is a strategy that I have been back testing now for a little over 2 months, but really been using it the last 6 weeks a lot. And it's really proven to be probably the most consistent trading strategy that I have been using, especially in this new environment, right, where we are in a much lower liquidity, lower volume market. And so for me, guys, this strategy has been a fantastic, very powerful tool for me throughout this market. It's been keeping me green most days. And really the bigger thing is that it's been a huge confidence builder. Is like, today, for example, was choppier action, but there was still a beautiful 15-minute candle trap. Play, worked out perfectly for the NVIDIA challenge. Ended up taking, I think, 11 or 12% gains. I think they went like 22, 25%. And that's trading weekly contracts. If you were using this on SPY, QQQ, which you could be playing those dailies for, more. But personally, that's not the style of trading that I'm trying to do on these count challenges. So that's just the frank, right? The bottom line there, right, is to be frank, I don't really want to be trading 0-day expiration contracts and full porting and things like that. I'm going very small in size in this market, and really keeping things, as risk tolerant as possible. So yeah, I hope that too on Lucid. So guys, let's talk about what the 15-minute candle trap is, and where is the best time and place to implement it, right? So the 15-minute candle trap is a strategy that I've been using based on 15-minute candle closes throughout the day, intraday trading. And so let's talk about what that is. So obviously, guys, we're talking about the 15-minute time frame here. So I know there are probably some beginners in there that you're probably still learning about candle structure and things like that. This is going to be a little bit more advanced because you're talking about trapping and looking at certain time frames, certain parts of the day, etc. So we were talking about, if you're on Webull, you can go down and hit the 15-minute time frame. And what is the candle trap, right? That's what's really important to understand, is why is it a powerful strategy? Well, what candle traps do, right? And when we refer to a trap, we are talking about something like this. Like on NVIDIA today, you see how this big wick extends above the key level, right? This is the trap, okay? And what that is it's when people that don't know to wait for a candle close jump into a momentum play, and then they get caught because the candle ends up closing below the key level, and then what you have is people caught on the wrong side. Okay, so why has this strategy been powerful? This market absolutely loves to get people on the wrong side. That is what this market, it's a fake out market, right? But there is capitalization opportunities in fake outs, guys. When you are talking about people being on the wrong side, the market loves to punish people on the wrong side in this market. It's just been a proven thing, right? I remember trading 8 months ago, and you could use the 5-minute all day long. There was super high volume, great liquidity, plays off open were ripping, plays like intraday were ripping, down or up, it didn't really matter, right? There was just a smooth, consistent trend. But when there is less liquidity in the market, you do not have as much range. And we talk about that all the time, guys, but range is so important, right? When there is less liquidity and less overall volume throughout the entire market, right? That's what we are talking about when we refer to liquidity. There is less range, right? So what was like this 8 months ago is now like this, right? And so you have to understand and adapt your trading accordingly. And when there is less of this, you get more liquidity traps on those candle wicks, right? And what that is that's people getting caught on the wrong side. That's people that are, so in this case on NVIDIA, right? Well, let's dissect how this worked today on NVIDIA, right? So first off, if you are not already, a major thing that I recommend doing when I am trading, right? If I'm talking to myself, the first thing that I'm gonna wanna do, okay, is go and mark out my pre-market high, right? So in this area, we have our pre-market high at this 159.76 level, right? Now, I automatically have my highest point that stock has been, even if it's at 4 a.m., which in this case it was at 4:15, right? We know NVIDIA has strong resistance at 160, right? So we put a level right there at that 159, at 159.8 level, right? Right in that 159.79. What I usually do if it's at 4 a.m. like that is I will use a 20-cent range. So in this case, at 159.8, in this case, I would use that 159.9 to 160 area as my level, right? I'm saying, okay, we know there's psychological resistance as well at that 160 level. And if you need additional confirmation, you can look back on the chart and see, okay, hey, there was a lot of resistance here. Look at what NVIDIA did the last time it hit this 159.9 spot, right? It came to the downside, right? So I know that that's a key level on NVIDIA. But in this case, again, we were using that pre-market high, right, as our zone. Now, I saw NVIDIA running on momentum in the middle of the day. I was actually planning to look at calls, right? Because a lot of people don't realize that pre-market high is there, and what they're gonna do is they see, okay, well, our opening range was this, right? We had our high of the day intraday was at 159.19, right? So we put a level there. A lot of people are, okay, opening range breakout, I'm gonna take calls. But look what happens when people do that, right? Yes, they could have been in and out quickly and you could have taken a profit, right? However, what I chose to do is instead of chasing the breakout, which in a bear market, I am not in a rush to be chasing breakouts. That is not the type of market this is. The type of market this is playing high confidence and high probability trades off of support and resistance levels. It's a very hard market, even today on Lucid, right? I had gotten a starter off open and then I sized in on the break to the downside, right? And look what happened, right? Trapped me, came back up, right? And then consolidated under the broader key level, but still, guys, finding big time momentum to either side is less in this market, right? So on this 15-minute candle trap, right, what you have is longs that get stuck because they see, okay, right, breakout over pre-market high, we're going to go to 162 until we're not, right? So let's look at the 5-minute, okay, during the same time frame. Keep an image of this in your mind. Let's look at the 5-minute. In fact, here's what we're going to do. I'm going to put these two side by side, actually, in a second. Now, on the 5-minute, right, if you were using the 5-minute, this would have been a complete fake out, right? Look what happens here, right? NVIDIA breaks out to the upside, comes back down, and retests. Here is where a lot of people also took calls, right? Because you have the breakout over your pre-market high area, you come back down, retest, and close over. Bullish, right? Except it's not, because what happens is longs enter there, and this is how you know the market is being cruel, right? We break out, come down, retest, we should go up, right? We should go up to, in this case, 161.50, right? We should have seen a move like this, right? We should have seen a move to the upside. Oh my gosh, I don't know why I just clicked that. We should have seen a move up over the key level here, right? That was our pre-market high. We should have seen a move up to the upside, right, into this 162 area. We came down, retested, perfect, except that's what happens if you look at the 5-minute in a lower liquidity market. Instead, what happened is this breakout and retest got sold through, and then we came all the way back down to support here at 157.8, right? So I'm going to put VWAP back on the chart just because I was using it as a target area, but now, guys, this trade ended up actually going, I believe, like 60%. I don't know if anyone stayed in, but I sold at 12% just because I'm just trying to do 10 to 12% a day on this account in terms of gains, like on each trade to hit that, $40, $50 goal each day. But if you look at the 15-minute, you could have avoided all of that headache, right? And really just focused on, okay, we had a clean 15-minute trap. There was no reason to go through that, fake out and sell through, right? So what I did is when I saw that 15-minute candle close with the trap, right? I knew that's that A plus 15-minute trap. Wick extending over high of the day, candle closes below the key level. Look what happens, right? Immediate fade to the downside. Okay, 3 straight red 15-minute candles. Could it have been smoother? Yes, but it never went red. That's the telltale sign, right, of how is your strategy performing is on your entry, right? You shouldn't be like, yes, there's a hard 25% stop on this. And I've gotten stopped out at my max stop loss one time, right? We're 6 out of 8 on the NVIDIA challenge trades. And I've gotten stopped out once at 25%. So that's a big one, right? This strategy has really, really been consistent. So what I want to do now is I just went through the first explanation, because you can use this strategy both ways. And the next explanation that we're going to go through is the bullish side, right? Like how you would use this in reverse. But if you guys have any questions, you can ask me in the live chat, and I can break it down on this trade from NVIDIA today and go through like where my thought process was and what I was looking at, etc. So if you have questions, just put them in the live chat and I'll try to answer them the best I can. Does that make sense from what I just kind of broke down on that trade on NVIDIA? Do you map out pre-market high and low and go off of those as well? I always use pre-market high and low. It's something that I map out every single day. I used to put it on the watch list every single day. I can start doing that again. I am always mapping out my pre-market high and low. It is always a crucial point for me because it was used, I use it every single day also to try to get a feel on the opening range each morning. But I always have my pre-market high and low mapped out on the stock beforehand. Where would my stop loss have been on this trade? That's a really good question. So if I was trading this trade on my primary account, right, I would have had a stop loss as a 15-minute candle close over 160, okay, because the key level, right, was at 158 to 159.9 zone, or excuse me, 159.8 to 159.9 zone. On a candle close above this level, right, see where the candle body closed on the previous candle? If we had closed above that point on any 15-minute candle, I would have exited, right? In this case, on the smaller account, right, if you have a smaller account, the best way that I can manage a small account is by having a firm stop loss, right? Not a stop loss based on candle closes or anything like that. Preservation of capital is number one when you have a smaller account. You've noticed on the small account, guys, I've been really, really keen on profit taking, right? In this market, I don't want to be in any longer than I have to be. I am shooting for absolutely in and out and take my money and go, right? On a small account, especially under $10,000, you can't really sit around and afford to look for the big picture. At that point, it's a compound city, right? You need to just be compounding so that you can get to a point where you have more capital, right, and you can let things work, because that's when you get those really monstrous trades, right, that make your year, month, day, etc. That makes sense, guys. On a smaller account, right, your goal needs to be to get to that $10,000 or $20,000 point, because then you can start actually letting things, run their course, because there is a course in trading. There is a bigger picture, right? I will tell you this right now. Scalping is fantastic and it works for a lot of people. The most money that I have made in trading has been from those bigger picture trades like Amazon, twice now, right? Some of those bigger picture weekend moves. Mara last month over the weekend, right? Yes, there is more risk, but there is just a much higher reward. What a scalping is on these time frames, right, intraday, is good for is building up a nice capital preservation, right? You're building up steadily each day, right? I pull out profits every week, but you're just building up that, hey, I'm green, 5K on the day from these scalps. Now I have a little bit of, leeway to let a trade like Lucid work a little bit, right? And you know what? At worst, maybe I lose $1,000 and I'm up 4K on the day, right? But the risk and reward there is, okay, well, if that Lucid trade works, that those scalp opportunities kind of provided, hey, this position's free now, I can let it work and do its thing. So that's where my stop loss would have been. Hopefully that answers your question. And again, guys, on a smaller account, that's just the style that I like to keep is, hey, I'd rather be really trying to build up the account with those scalps every day. And that's the reason that I'm doing one trade a day, is because if you don't discipline yourself, you're just going to overtrade. And this market, overtrading is so toxic. If you guys haven't noticed, I'm trading about 50 to 60% less than I normally did, right? Because there's just not as many big moves. There's not as much happening. And so, you have to discipline yourself in that aspect. How would you analyze volume when looking at the trap? So volume, while important, right, is not king on the 15-minute candle trap, right? At the end of the day, the volume can be really iffy on some things, right? So, like I said, I played a trap that didn't confirm at the end of the day yesterday, and it was honestly inconclusive. I did trap over the key level, but it was, again, the last 5 minutes, and that candle isn't going to close until the close of the day. So there are instances at the very beginning of the day and at the very end of the day where, right, there can be some inconsistencies on the candle close. Personally, for me, guys, volume is more of a wider reaching thing where I'm trying to look at the total volume on the day. I knew that volume today on NVIDIA was much lower. There was really low volume on a lot of things today, right? And the volume in general is lower in this market. So does it work only if high of the day or pre-market high or low? No, it does not. It works on, okay, so let's go and look at Rivian from the other day. Actually, we can look at SPY from yesterday. SPY was perfect. Let's look at SPY from yesterday. Okay, guys, so let's look at SPY from yesterday, right? Now on SPY, we had obviously a bigger gap down off the open, right? And then we established our previous low of the day, right? Now when you see, off the open yesterday, right, we established this 375.98 level, which we already kind of knew was a key level coming in from the day before. We knew that 375 level was the key, right, into that 375, 376 zone. Now, when we made our low of the day here on SPY, we saw this first wick up, right, which was a 15-minute candle trap at that low of the day area, as you can see, right, on that 1045 candle, we made that low of the day right at that 376 area. 15-minute candle trap, right, and then we trapped again. So when you see, sometimes this is a little bit more tricky, right, because right here you technically trapped over the prior low of the day. But it wasn't, very conclusive, right? The price action still looked pretty weak. But then you see the next candle form, right? And then you get that really long wick, and they bring the candle body up just to that low of the day, prior low of the day area, and then you get the gap to the upside, right? Honestly, I think I could probably find a better example. In the beginning of the day, it's a little bit, it can be a little bit iffy. Now off of open, there's a pretty, a pretty fantastic example of you get these back-to-back wicks, right? This is a pretty clear 15-minute candle trap where this candle on SPY was over the key level of 380, right? Which was also acting as that pre-market support. And then when you see that 1015 candle, right, it came above 380 and then we gapped down below and closed that candle at 380 and then we got, a 4-point fade from that level. So one of the better 15-minute candle traps I was going to go over was Chewy. This is one of the best long side 15-minute candle traps I have seen. So I have this one annotated for you guys already also. Okay, so let's look at Chewy. I am looking at the Chewy 15-minute chart. I am on the 9th of June at open. So if you want to follow along. Okay, so somebody asked a great explanation with NVIDIA. How would you balance a stop loss with respecting the candle close strategy? Okay. Normally, right, the best way, honestly, if I was trying to be as risk adverse as possible, right? Like I was trying to really protect my capital the best way possible, I would be trading next week contracts because the 15-minute is a larger time frame. Like if you're scalping like 0 day to expiration, it's almost impossible to use the 15-minute because your contract can go, 50% down in less than 15 minutes, in 5 minutes, right? So you should be using the 5-minute or even the 1 minute maybe, right? But if you're trading, if it's early in the week, the 15-minute candle strategy is perfect for weeklies. It still works, fantastic. You might have to have a little bit thicker of a risk tolerance, but really one of the major advantages of this one is you can adjust it, right? So going a week out or 2 weeks out even is even better, right? You have more time to let things work. It's not going to be as volatile. Obviously, your risk is lessened, but your reward is also lessened. So that's a give and take. For me, though, if I was really trying to be like, I still like to have some upside. I'm trading options here, not commons, right? So, and already premiums are moving slow. So for me, I'm willing to take on a little bit more risk and use smaller size. But if I was really trying to be as risk adverse as possible, I would use next week's expiration on these 15-minute candle trap trades. But early in the week, like Monday, Tuesday, it's not too much different. Do you only look at only 15 for trap? For example, today I saw a big trap on SPY in the 30-minute and made 30% with the trap strategy. So there are always going to be traps on lower time frames. The reason that I like using, there's a common misconception. I use the hourly traps, the 30-minute sometimes, but more often I use the 15-minute and the hourly. I have found those two to be the most consistent, right? And the most powerful, and I tested them the most, right? And that's because of my familiarity and personal preference with the hourly and the 15-minute time frame. I like those the best because I've spent hours and hours back testing them, and I feel like I know how those time frames look. I know how those candle closes look. And on NVIDIA in particular, guys, the reason that I'm doing this whole account challenge is because I know how those 15-minute candle traps work on NVIDIA, because that is when it comes down to the personality of the stock, right? Is knowing how those candle closes look, knowing how it likes to act off certain levels. And so for me, you could probably take this strategy and apply it, in my opinion, to the 15-minute, hourly, or 30-minute time frame. In this market, in my opinion, you will get faked out using this on the 5-minute or 3-minute more often than you will be successful, because there are so many like smaller time frame traps. In my opinion, this is what has worked the best, and so I'm going to keep using it until it stops working. Do I always enter and stop out on candle closes? That's a fantastic question. Okay, so on my main account, yes, because I'm usually trying to actually let the trade play out, right? And on the 10K account, same way. On a very small account, like under $5,000, my strategy personally is to have a hard stop loss, like I mentioned. So I would not use the candle close, right? Even though that might stop me out of a trade before it works, which would obviously suck. What it will do is it, over time, in my opinion, preserves your capital better, because you don't get married to trades. You don't end up like, letting it like, okay, 15-minute candle close right there, When you have a smaller amount of capital, you really can't afford to stick around and find out. When a trade goes your direction on a smaller account, like a $2,000 account, or especially really small accounts like $500 or $1,000, it's like see green, take green, and just literally like $30 to $50 a day is going to add up so much over time, right? Because those $30 and $50 days start to become $100 and $150 days, and then you pop and you get one of those $400 days, right? Like you saw how I scaled out at the NVIDIA trade today, right? One contract. Always going to be scaling out in either 1/2 or thirds, right? Very rarely will I just sell both. If it's a huge move in the direction that I want, sure. more often than not, I'm going to scale, 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 and then that last contract, right? I want to be taking gains and compounding. I can't stress this enough, but compounding doesn't just work with long-term investing. It works with trading too, because especially on a smaller account, it's just want small wins, small wins, small wins, and you also want to get in a routine. So many people are focused on the dollar amount that you're making or whatever, but so much of trading, guys, is being in a responsible, disciplined headspace and using a consistent strategy on a day-to-day basis. That is a huge thing when you're trying to be consistent, right? Using trading to finance whatever it is, right? Maybe you want to. That's where understanding your why is really important, right? And we're starting to get more into like mental stuff, so I'm not going to go too far in there, but your why is so important because it's going to determine what type of trader you are, right? My why is now I'm trying to grow wealth, right, with trading. And before it was to pay, every single, right, like I had, expenses in college and all this stuff, right? And now I'm really trying to start growing my wealth. So I'm willing to let things work a little bit more. You've noticed I'm doing more of like the bigger picture Amazon trades. I'm doing more of the bigger picture Coinbase, right? I'm trying those bigger picture trades with further expiration, right? And then scalping to kind of, really keep my account growing on a steady basis. Do you only look at do you always enter and exit on? So hopefully that, I know that was a long explanation, but hopefully that answers your question about, okay, do I only exit or enter on candle closes, main account primarily? All right, guys, so now I'm going to go over, you've held calls or puts on monthly. I'm guessing you're asking if like a trap works on larger time frames. Yes, daily traps definitely work. Weekly traps work. Like I said, higher time frame the better, in my opinion, on traps, because that just means that there's usually more people on the wrong side, right? To explain this the best way I can, when people are on the wrong side, right? So for example, in this case on Chewy, right? In this example I'm about to use, there's this massive wick down. And then, so the bigger the wick, right, and the bigger the trap, right? So maybe like something's like, oh, it's definitely breaking this level, going short, whatever. Then you have a ton of shorts in there. What that big wick is shorts that get trapped because they entered before the candle closes, or versus the other way, right? Or if it's on the long, you're shorting and maybe there's a huge long wick, right? That means that there's a lot of longs trapped up there that bought into the parabolic move or the breakout, right? So whenever you have a lot of people on the wrong side of a trade, that is fuel. It is literally like gasoline when you have people on the wrong side, and it's going to fuel the move in whichever way that candle trapped, right? So if that candle traps, in this case, right, it traps shorts, that's going to fuel the move upside, right? Chewy saw a $2 move up after this. If it's the other way, right, on Nvidia, it was a medium-sized wick today, nothing too crazy, and so the move down wasn't absolutely insane, but we still got a $3 move down on it, right? So yes, so good question. Once you see the trap and wait for the 15 minutes to close, are you entering as soon as the new candle opens? Yes. I usually enter right when that candle opens or as the candle closes. Oftentimes you get a little dip down to the prior level and then see that move upside. So in this case, guys, we're going to use the pre-market high zone on Chewy. This was on June 9th off the open, and I have this one annotated for you guys. And we're going to use this as our example for the long side 15-minute candle trap. Let me use the bathroom really quick, guys. And then we're going to do the long side example next. All right, guys, so we're going to cover the long side version now. Well, first off, I was green on the Lucid trade the entire day until the very end of the day because I had an 11 entry on the 13 puts, so I was actually up 80% at one point. I just chose not to scale because, again, bigger picture trade for me on Lucid there is under that 17 level. I still felt like the risk to reward to me on the chart, that 17 area was still my risk. And because it has a gap to fill to the downside, I didn't average down on the 15 puts at all, right? And I did that purposefully, right? Is I didn't average down on the Lucid trade. So I had an 11 entry. I actually averaged up a little bit on the 13 puts. Yeah, of course. All right, so let's talk about the long side move, and then I'll go over the Lucid trade from today. Okay, so on Chewy, we are on the June 9th 15-minute chart, and this is at the open on Chewy. This is one of the best 15-minute candle traps I have seen in a very long time, and I want to go over it. Okay, so guys, this is the 15-minute trap to a T. Okay, so off the open, right, you can tell we have our pre-market high here at the $30 level, right? There's a tiny wick above to 30.05, but in this case, when it's a bigger wick like that, I'm going to use a zone of, like I said, about 10 cents to 15 cents. And in this case, when it's a whole number like that, I'm going to use that $30 level as my key, right? And I can also tell because the candle body right before open touched that 30 level. Now off open, we saw a move up to the 30.45 area, and then we pulled back, right, and moved all the way down to the 29.48 level, right? Now I want to show you guys the 5-minute chart on this also because it's really important to look at, but here's the 5-minute chart on Chewy, okay, from that exact same time. Okay, so now look what happens. If you're using the 5-minute, right, you would have been stopped out here, right, and here, or here and here. Okay, so the second or third 5-minute candle, right? The first 2 candles of the day, you're going to get stopped out on that second candle or on the third candle, right? Because it's closing below the $30 level. But the key is look what happens when the 15-minute closes. This is why I'm telling you using this trap strategy on a 5-minute or lower time frame is going to have a lot less success because this is an example of back testing, right? We're looking at what the 5-minute would have done, right, had you been using the 5-minute. Okay. Yes, I will tweet the books. I already tweeted them actually, but I'll show you them right after the stream is done. Okay, so again, guys, on the 5-minute, right, look at the third 5-minute candle, right, leading into the 15-minute close, right? So that 5-minute candle closes below. Okay, so you're like, well, you know, shit, right? I'm probably going to get stopped out here if you're using the 5-minute. And that's the whole point of the 15-minute trap. What this candle does is it stops out longs, right? People that are using the 5-minute go short. And what that does is it actually traps shorts. This is where shorts get trapped, right? Is on these 2 candles, right? People are expecting a move down because we're closing under that pre-market high. What happens actually is the 15-minute comes back over the key level at 30, right? Right here, right? And closes right at that $30 price point. And then look at the next candle. It's a $1.20 move to the upside. That was a 96% move in the calls just by waiting for that first 15-minute candle to close. Okay, that's a humongous difference, guys, of getting stopped out of a trade for a 29% or 30% loss, I believe in this case it was, when the candle actually moves right back over the key level, and then you get that $2 move to the upside, printing, I think, 130% on these. So what that did, guys, is this is a perfect illustration of where if you had used the 5-minute, that's kind of what people are doing wrong in this market, is they're getting trapped, they're getting faked out, and what they're a lot of people, worst case, is you're getting trapped short side and then the move to the upside, right? So that's a perfect example of a really long wick, right? This wick on Chewy, right, stopped a lot of people out, and a lot of people were going short because now we're making a move to pre-market lows, right? When in reality, we closed directly just at that $30 level. Next candle, there wasn't any weakness, right? That next candle immediately sees that big move to the upside, breaks its high of the day, right? And that's a really good signal for the long side trade. Now, on this trade, I actually was in the weekly calls, so there was a lot more volatility. On a Thursday, if you're trying to use the 15-minute candle strategy to a T, I would be using next week's expiration as my vehicle of trading. So that's it's a fantastic example, guys. Now, if you're asking, well, how did I know when I was going to sell, right? Okay, well, the way I would have known where I wanted to sell, right, was I had this $32 level mapped out on the daily chart. I knew there was a lot of resistance at the 32 area. So before I even entered this trade in the morning, I said to myself, okay, I know there's big daily resistance at 32. I'm going to make sure that I'm exiting this trade at that 32 level, right? Now, another good example, right, where you can tell, okay, well, like, how do you know where to buy, right, etc. Chewy actually performs another 15-minute candle trap right here, okay? So when Chewy broke its high of the day, traders are now going to use that old high of the day as its new support, right? You get that trap, consecutive 15-minute candle traps, and then you get a move to high of the day, right? And then you finally get the kill candle, and then there you go. And to actually end the day, Chewy had a little 15-minute candle trap of its own. But point being, this is a fantastic example. When you get those 15-minute candle traps with those long wicks, either up or down, that is usually a fantastic example. The longer the wick, the more fuel there is for the move in the direction that you're going for, right? So that's a big one. If you're taking notes, the longer the wick, the more fuel there is in the tank, right? Because in this case, really long wick means a lot of shorts in there, means those shorts are going to need to cover when they see the 15-minute close over. And if they're smart, they're going to start seeing that they're getting trapped a lot on those 5-minute candles, and they're going to start using the 15-minute because they're like, I keep getting, that's how I started using the 15, is in this lower volume market, I kept getting trapped, I kept getting stopped out of things, and then it would rip, and I'm like, well, what am I doing wrong? And then I just started, I flipped over to the 30-minute time frame originally, and then I really honed in on the 15-minute because it really just started making a lot of sense. I saw so many moves setting up like this that it really just made the most sense in my opinion. And then I started back testing it, and it was like, okay, hey, this 15-minute trap is happening a lot. And if you're in the room and you trade the 15-minute trap, you probably know how reliable of a strategy it's been, these past couple months. That kind of makes sense. So if you're taking notes, that's a great thing to write down. The longer the wick, the more fuel there is for the upside move. So, and that's a good. So does anybody have any questions on the long side move that we saw today? Quickly, before we go over the Lucid trade, I'm going to go over those books really quick. I'll give away another book tonight. All you need to do is comment on the YouTube stream, right? So right down below, just comment one thing you took away from this, the most powerful thing, the thing that helped you the most, right? The thing that really hit home for you the most, that helped you, and I'll pick one person that comments and give away one of the books that I read that helped me a lot. So just comment it on the stream, something from the stream today that helped you, and I'll pick one person that comments to win a free book. So I'm going to get the books for you guys. Okay, so the first... Yeah, absolutely. Mans, if I'm understanding this correctly, you can use this trap at any key level that you have mapped out. More often than not, yes. I like using it at least after the first 15-minute candle of the day, right? First 15-minute candle can set the trap tone. I like to use it pre-market high and low or big. Those are the areas that I find a lot of success. But yes, more often than not, you can use it pre-market high and low or like big daily levels that you have mapped out. Oftentimes, it's going to work really nicely there. But pre-market high and low are fantastic points. Opening range is also really nice, right? So again, on Chewy, we had a pretty clear opening range set on this one, right? We had that 29.4 level and the 30.46. Then you see that clear breakout over 30.46 on this example on Chewy. Absolutely. And guys, I will tell you that right now, in a lower volume market, someone commented, Paul said, yeah, it's a huge thing for sure. So Paul commented, I learned how important it is to use the larger time frames like the 15-minute and the hourly instead of getting trapped on the 5-minute. Exactly. It's 100% a thing. In a lower volume market, definitely want to be utilizing those larger time frames. Long wicks are definitely important. Absolutely. Yeah, guys, and so someone said, I learned by getting stopped out. That's how I found this, right? Is I was like, I keep getting stopped out on the 5-minute. What the hell, right? I'm taking this trade. The level is matching up. What is going on, right? Like, for example, if I was using the 5-minute chart like I had been 8 months ago, I would have shorted Chewy, right, when it closed on the 5-minute below its pre-market high, right? But that's where they get you in this market because there's lower volatility. It takes more time for the move to happen, right? So you have to adjust your time frame, right? You can't trade, looking for a move like that and use the 5-minute in a lower volume market. It just doesn't work as well, right? And these are the important tweaks that you have to make to your trading. I used to be a 5-minute guy almost exclusively, and as the market slowed down and the liquidity slowed down, you have to adapt. Big wicks are huge, absolutely. The longer the wick, the more fuel. Exactly. And guys, one of the biggest tips I could give you is when I started trading these, right, I used the next week's expiration first, because the last thing you want to do is start doing this and then you are doing weekly calls on like a Thursday. That's not going to set you up for success, because those weekly calls might as well be 0 day to expiration, right? They're going to be moving so fast and so much volatility. If you have any type of risk management, you're going to get stopped out. In reality, what I did is I used the next week. Ooh, that was a little burp there. I used the next week expiration and I found a lot more success, and then I was able to transition back to the weekly calls, right? That was a big thing, or weekly puts, right? Oh, nice, dude. That's awesome. Yeah, of course. Quickly, guys, quick break. Some of the biggest books that help me, these are not going to be trading related. They're all going to be mental, right? I'll do some trading related books. I've really only read VPA by Anna Cooling, but Trading in the Zone I heard is really good as well. I personally think that the majority of your technical training on trading is going to come from the chart and doing exactly what I'm doing right now, and that's after the market's closed, going back and back testing and looking at things and going over them again. That's where the majority of your technical, right? You can't read a book and expect to become a master at being technically sound, right? So for the mental side of things, Brain Hacks, fantastic book, one that I'm definitely going to give away multiple copies of. Thinking Fast and Slow, New York Times bestseller, fantastic book. I listened to this one actually on tape on a drive. I had a 16-hour drive in front of me, and I listened to the entire book. Fantastic book there, guys. Soundtracks, it's a book about overthinking. Fantastic one as well. The Millionaire Next Door is one of my favorite books of all time for sure as well. So all of these are quality material, and I'm going to be giving away one of them. All you have to do is comment in the comment section of the YouTube here, where it says leave a comment, not in the live chat, but in the comment section. Tell me what helped you the most, something you took away from this that was powerful, and I will pick one person to win one of those free books. Jersey, what's up, man? Yeah, I see you by the last name. So, somebody had another question. Let's quickly go over the Lucid trade. Bitcoin failing a bit right now as well. The Lucid trade this morning was a little bit of a rough one from a breakout standpoint. So let's look at the 15-minute. Now, honestly, guys, I think that the Lucid trade this morning, technically, so here's what I did. This morning, I knew there was going to be some sell pressure. I knew that I had this setup marked out. So on my main account, when it broke its pre-market low, without waiting for a candle close, I took a starter in the 13 puts, right? Because I literally traded this exact setup last month, and it kind of did the same thing it did to me today. So it broke below pre-market. That pre-market support area, I took a starter on the 13 puts around 935. Those actually went up 100% because we got an additional 70 or 80 cent move down, and it broke support from yesterday, right? The 15-minute candle closed, a lot of sell pressure in there, guys. This is one of those where technically, fantastic setup, guys. Non-stop sell pressure in that first 15-minute candle, and then what happens in the next 15-minute candle? We get that massive move back to the upside, right? Now, to me, that felt like more of an outlier candle. And then what I probably could have done better in this situation was saw that NEO was ripping, because that definitely had an effect, because technically that was a perfect first 15-minute candle. Even if I hadn't taken the starter, I still would have entered this trade. And if I didn't have a little bit of a bigger picture to this trade, I probably would have stopped out on this candle move above. But the reason that I did stay in is that I entered this trade with a risk of this 1722 area, right? And why is that? Well, on this trade on the daily, right, Lucid has a massive gap to fill over the 1722 level. However, it also has a massive downside area to fill, right? Now, when you look at this, to me, risk is that 1722 level. And the reason that I'm willing to see this through a little bit is because there is fantastic risk to reward for me. I know that I can keep my risk at 1722. Yes, I might take a 30% or 40% loss, right, on the 13 p.m. referencing, right? Yes, the 15p was not an ideal entry, and yes, it's down 40%. The reason that I didn't average down is because the 15p idea did not work, right? In reality, that was not a good entry. I probably should have exited it. However, the reason that I kept it is because there was a bigger picture mindset to me. It was Tuesday. I know that Lucid is still sub the key level. I wasn't sized in extremely heavy or anything like that. So I'm not going to start, tomorrow with a today problem. What I'm going to do is if that trade fails and it invalidates, I will exit, right? But I felt like in a more bearish market, I want to let my risk at least be tested here, which it was not today. Okay. Now, could I have sold the 13 puts as soon as I took the starter at 11? I'm sure a lot of you did, right? That went from 10 or 11 to 21, right? 100% move because we got a big move to the downside, right? And on the 5-minute, Lucid looked equally bearish to me, right? If we look at the sell pressure that came in off open on Lucid, there was definitely a lot of selling off that open candle, right? It was actually almost 2 or 3 million shares, I believe. And guys, look at this setup, right? Fails, right? And then the first 5-minute candle that tries to reverse, it gets absolutely stuffed, right? And we get this big wick, and then, because, simultaneously, I'll keep the 5-minute open just to, look and see and kind of understand how those candles are forming. Okay, big wick right up to that prior 16 area, right? Psych level, rejects and comes back down, and then we get the big gapper candles, right? Which I consider to be a little bit more of an outlier move. Probably because NEO was ripping. This candle was just full of selling pressure. You can tell that this is a very sell-heavy candle here at 9:45 because look at this. There's no wick on the downside. That was just straight selling pressure through that candle. So that was a big one for me. I still think Lucid's going to be fired tomorrow too. But hopefully this helped you. I really think that this stream should have really benefited a lot of people. I know that a lot of people really didn't understand this, and I know that some people can't day trade all day long. I get that people have jobs and things like that. Guys, I get it, right? This is what this Technical Tuesday stream is for me to go over what is working for me, why it is working, and all you have to do is go back and review my NVIDIA trade from today. Even if you didn't take it, right? At the very end of the day, pre-market high, zone, right? So I gave myself a 20-cent zone here off pre-market high. So that 159.8 level, oftentimes with that pre-market high, which occurred at 4 a.m., you have to remember that pre-market high occurred at 4 o'clock in the morning, right? That's important to map out your pre-market high and low. It is so, so important. If you are confused, go look at the Discord. There's a video, how to use pre-market levels to your advantage. They are important, right? So really, guys, it is crucial to use those levels to your advantage. And it is also crucial to go back and back test your strategy and really make sure that it's doing the most for you. Yes, I will be live during the FOMC, absolutely. Are 15 and 5 minute candles preferred for day trading? Okay, this is a great question. I'm going to answer this one. This is a really good question. Are 15-minute candles and 5-minute candles ideal for day trading? In this market, in lower volume, okay, I like the 15-minute chart. That is my ideal chart. If I am doing something like an overnight maybe, I will look at hourly candles. I will use hourly candles throughout the day for additional confirmation, absolutely, especially if we are getting big rangy moves. But in a lower volume market, I have found the 15-minute to be the sweet spot for day trading. Daily and weekly traps are good for swing trading, in my opinion. So again, this is adjusting what time frame you're using to your trading expiration. So in this example, if you're going to enter a swing trade because there was a weekly candle trap, right? So for this example, we can look at QQQ, and I saw somebody ask this question on the Twitter too. Let's look at the weekly on QQQ, right? And I'll clear my levels just because it's going to be a little messy otherwise. Okay, so when we saw that big relief rally, right, at the end of last month, look at what QQQ did, right? This QQQ weekly candle trapped pretty hard, right? We had a local low established at 285. This weekly candle on QQQ, it wasn't until the last day of the week, but on that last day of the week, they brought that candle above the key level and the prior local low, and then we get that big gap up. So you can definitely use these wider time frame traps. In my opinion, the traps work on larger time frames the best, right? So 15-minute, hourly, daily, weekly traps are absolutely valid there. But you have to adjust your expiration. You can't trade weekly contracts using the weekly time frame. If you're going to use the weekly time frame, you should probably be trading 2 months out. Or if you're going to use the daily time frame, you should be trading at least 2 to 3 weeks out. Probably 2 weeks in my opinion. If I was doing that, right? So I will be live during the FOMC meeting on YouTube Live tomorrow. Yes, we will have a recording of this, absolutely. I recorded everything. All right, guys. A lot of people with questions on Twitter. I recorded everything for everyone, so this stream will be available to be recorded, and you can go through it and enjoy. So I hope you guys benefited from the pre-market live tonight, from the pre-market live, from the Technical Tuesday tonight. I had a lot of fun doing this. I know it was definitely some serious business tonight. We went over the 15-minute candle trap from start to finish, gave you a lot of good notes to take down about things that helped me a lot, and I think may help you too. Again, going to give away a book. All you have to do is comment on the YouTube something that helped you. Comment in the comment section, and I'll be giving away some books. At the end of the month, I will announce all the book winners. So I hope you guys have a fantastic rest of your night. It is getting late. It is 9:05. Get some sleep. Have an awesome night, and I'll see you guys bright and early. FOMC day tomorrow. See you guys on the pre-market live.